What's up, guys? I'm Joe Von Brickton, and welcome to Pippin and Dippin Academy's YouTube channel. We're so excited that you guys are here, and just want to welcome you with a big, huge thank you for stopping by. Hit the subscribe button if you haven't done it. If you're a first-time visitor, if you're been here before, you already done it, great. Make sure you leave a comment down below saying I subscribed. If you like the video, if you really like the video too, guys, pound that like button. So 3 things: new subscribers, make our new visitors subscribe. Make sure you comment that you subscribed in the comments. If you would like us to do a specific video, put it in there as well. And the third and final thing, if you like the video, you like the content, hit the like button, please. It helps us share our content with other people just like you that are looking for some answers on how they can become better Forex traders. With that, guys, I'm so excited today. Hunter has some badass sauce that he's going to share straight from Texas for you on liquidity zones and how you can use them to beat the market makers. So without further ado, Hunter, it's all yours, buddy.
What's up, guys? I just wanted to piggyback on what Joe said. Yeah, hit that like button, subscribe to our channel, guys. When you do that, it boasts us up to do more. It makes us happy. It makes us think that we're doing a good job and stuff like that. And people need that every now and then, you know what I mean? So we're like I said in our, what was it? I don't know, 5 or 6 videos ago, we said 1,000 subscribers will do a giveaway. So guys, start sharing this with your friends and things like that. We'll do a giveaway, and it could be something really awesome that could compel you to something you want. So what I'm gonna do is I'm gonna share my screen now, and let's go. You see my screen?
It is loading. There you go.
All right, cool. So what Joe said, market makers, guys, their job is to take your money. This market was designed to take your money, right? Either way you look at it, because I know that we're just a little speck on the radar, not even on the radar, really, when it comes to that. But they understand the psychology behind how we think, okay, and where we're going to set our stop losses, how we're going to emotionally be attached to the trade, things like that. They understand us as a whole, right? Everyday human being. You can't really tell me that you right across from the screen or not. You're attached to money, right? So you want to make that as tight as possible, right? You don't want to lose no money, right? And if you're a guy across the screen, you definitely don't want to lose no money because you're competitive. No guy likes losing, right? Because we're all competitive, right? If you're a sports guy, you know, back in the day when you're playing basketball, football, whatever, you know that you hated losing or you hated missing shots or stuff like that, right? Same concept. And all these emotions will come out in the market when you're trading, because you feel like you're in a game. You feel like you're going against them, right? So it's either 2 things. You can widen your stop loss, or you can wait for them to show their hand, and it be the same thing, right? And my advice is to wait to see their hand. Wait to see their hand, right? So I want to box a trade that we took, was right here. I want to box this trade in. I don't even see my tools. Let me do this. Maybe they're here. Okay. Let me move this around, guys. Okay. I can put that there. Okay, cool. So I'll box this in right here. Okay. This was a set, and I'll show you why. Okay. We can go to the 30-minute. We can go to the hour. Okay. You can see that this is my signature set, guys. When my trend direction is up, okay, and I start to get these pullbacks to the 50 on the hour time frame, and I get a shark fin, that right there lights my eyes up, because I know for a fact that this is my trade set when I'm going in the direction of the trend, right? That's my trade set, because what does the market do? It goes up, it pulls back, it goes up, it pulls back, it goes up. Now, inside this shark fin, I'm not saying just to buy because it's a shark fin. No, you wait for the pattern. You wait for the pattern. You wait for them to show their hand, right? So, and this is my high probability set. This is my perfect trade set setup. Okay. So when you see this, you'll go down to the lower time frame, right? And you will see that this is a perfect W pattern, right? We have a left leg. I know Asian box is not printed here, but left leg here, we come down, we stop hunt, and then we make the real move, right? I want you to understand there's multiple variables here. For one, you have a divergence across the board, right? All the way across the board. That's one. Not only do you have a shark fin, okay, let's start from the top. For one, you're in an uptrend. Two, you have a shark fin on the higher time frame. Three, you have divergence. These are all confluences, guys. These are rules that you need to follow. Okay. So let's see their hand. Their hand, like I said from the beginning, is to take your money. Okay. Guys, they know these price points that every time somebody gets in a trade, like right here, oh my God, they're showing bullish engulfings. This is respecting there. We got pins here. It's game on, baby. They know that there's stop losses all right there. They know that. Okay. They know that there's stop losses there. Okay. So when you see them wick that area, okay, they're doing two things at one time. They're inducing traders to go short, and they're taking stop loss orders that people that were buying. Then they bring the market back, and they just stopped out the guys that were going short. Okay. And boom, they give you your trade setup. So this is my trade setup. So that's a nice, good volume candle, trigger candle, close above the 13, close above the market baseline. I get my discounted it. My stop loss is below the wick, right? So I get my discounted. I have a 20 pip stop loss max, and the trade goes in our favor. Okay. What are we targeting? We're going to target liquidity areas, right? So there's my first target. Okay. Or we're going to target what? Let's find it. 1.3600, guys. Right there. And it smoked it, right? The reason why is that I target these areas is because these areas are targeted by institutionals. Okay. So you can even see here how this trade, even though it got liquidity, this trade setup was at 1.3550. Okay. 50s and double zeros. If you haven't watched that video, go back and it has it on the thumbnail. Okay. And you can see that the market moves in 50 pip boxes. Okay. And you can see how it respects these levels. Why? Guys, it's all psychology. If I told you right now, I was in a room with you and I said, hey, count to 100 for me, what would you do? You would count to 100 in an easier, simpler way, right? Fives, tens, because it's easy, right? They know that we know that. How easy is it for you to set your stop loss at those areas? It's easy. It's simple. It's a round number. And they know that it's there. And they know that they can target that to get you every time. Right? So this is guys, this is a textbook trade. Okay. So right here, we can put a bunch of dollar signs because that's what that was there. Okay. Right here. Okay.
Lots of liquidity. And look, guys, one of the things too that he's doing there, a real cool trick is draw the box around that right there. It's consolidation in that liquidity zone until it breaks out of that box or shows momentum out of that box one way or the other. It's not a valid trade. And you can see when it made it out of that box, it was a valid trade set, whether you got in on the perfect entry like Hunter did, or you waited for it to get out of the box. As soon as it closed outside of that box, then you could take the trade too. That'd be a little bit safer, a little bit more conservative, but the perfect entry is where Hunter's got that green line right there.
Yeah, exactly. And two, guys, when you get a trade setup like this that already took your money and it gives you your entry, trade towards the money. Okay, trade towards the money. You know, people were selling here. You can see a double top right here. People were selling here, and they're equal. They're equal highs. That's a dead giveaway. That's like shoot me right now, right? Shoot me, right? So I'll show you one more example and we'll bounce out. Here's another one. And check this. I don't even have to move the lines. You guys see it. This is a London pattern. Okay. I don't even have to move it. Look, check this out. So we got more money right there, right? Okay. We set a peak formation high, multi-day M pattern, and we drop, right? And we start to make lower highs. I can show you on the hour. Let's see, what day is that? It's the 3rd. And you can see right there, that was the peak formation high. Okay. And we started to move down. Okay. Then we came into our anticipation was to sell though, right? Because we broke in this low. Okay. We had a multi-day M pattern. We're breaking down. Now we trend reset it right here and we start to move back up. And I'll show you this one. This one was perfect. This was CPI news. And I'll show you the manipulation behind that. And then we'll bounce. Okay. So I'll go back to the 15. And I'll show you this trade right here. Same thing. Accumulation, stop, punt, trend run. Okay. Accumulation, trapping people, stop, punt, grab liquidity, grab the money, right? These wicks even went past that high. So spread, I guarantee you when the price got here, spread opened up and got the people that were selling here. And look where the trade's at. 1.3550. We set up, this is a shark fin on the 15, 5-minute M pattern on the 5-minute, and the rest is history. And target what? Target what? Target liquidity. Boom. Right there. And then what else could you have targeted? Right? What else could you have targeted? Just don't get no better than this. It's like taking candy from a baby, guys. Look at that.
3500.
0-0. I mean, it's easy, simple. And then look, guys, when you get into a trade right here and you're going down, you're asking yourself, where do I put my take profit? This is where you put your take profit. And then from there, manage your trade. Manage your trade from there, right? Because you know that you're going to move inside this 50 pip box. So, oh God, I'm 25 pips in profit, or I just broke this structure, break even. Get the risk off the table. Right? All right, let's move on. This is perfect, right? I want you to pay attention because this was news. Okay. If our direction was up, okay, they set up a perfect out of the band, in the band trade M pattern. Could have been taken. Absolutely. Right? It looks good on the 5-minute. I actually did take this sell. But in my mind, I knew exactly what was happening here. Okay. So they set up this pattern to trap. Boom. If anybody took it, yeah. If they were looking for it and took the money where it was supposed to be taken, they won. If somebody was looking for a holy grail, they lost. Right? This is the reason why it's important to be taking your money. Right? So look, I want you, and these levels are very valid too as well. Look at that, 1.35250. Okay. This is a 25 pip range, okay, from that 50. But I want you to pay attention. I'm going to zoom in right here. I want you to pay attention. They set the pattern. They dropped. Look how far they came. You got to understand that there was what? There was what here? Liquidity, money. Why didn't they just stop at that low and just go up? Why didn't they just stop at the low of yesterday's low and go up? Why didn't they stop at the Asian high and go up? Why didn't they do that? Right? You ask yourself that. I ask myself that all the time. Like, why didn't they stop at the Asian high? Or why didn't they stop at the EMAs and jump up? This is the reason why indicators are worthless. They're just confluences. They're not the all be all. They're just confluences. That's all they are. You use them for confluence. But look, if we're trend resetted right here, we have money, boom, right? if anybody was trying to still sell here, we had, for one, we had money here. We had money here. Okay. We had money here. So they did it. Set the pattern. They ran down, got this money, ran back up. This is the real move. Ran up, took money, took money. They happy. There's a lot of people with the down frown face right here, right? Because they thought they were right, right? And look, pay attention. If you guys are looking at this market right now as we speak, go back and look at this area and watch how price reacts. Okay, at that 1.3625 area, watch how price reacts at this area. It blew through 1.3600. Okay, it could go to 1.3650 and react, but watch how it reacts in this area. Okay, but you can see here that we moved from here. Okay, if you entered the trade right here, I'm just saying, if you did, if you went to the lower time frame and caught the W pattern, that's what we look for. Okay, you broke the 50, you break even. Okay, what's your next take profit? Liquidity, 00, 25. You can manage your trade like that, right? I think that was, guys, if you didn't get value out of this video, there's something wrong, because the market does this every day. Every day. If it's not taking money, it's returning to order blocks, retesting order blocks, and then moving back in the direction. And pretty much inside of that, it's taking liquidity as well, and short-term lows. And the more you trade, the more experience you get, the more you understand what this is. Okay. And you might be asking yourself, well, Hunter, I'm already doing this stuff, I'm just still losing. Guys, you need some skin in the game. You're not gonna be good by just watching it. You gotta be active. You gotta trade demo. You gotta trade a small account. Trade your big account with micro lot sizes. Get the skin in the game. Right? So that's it. I know there's a lot of value spit right here, and you guys can take this, run with it. Right? This is pretty much the sauce, man. This is the sauce, dude. This is the money shot. Know your direction. Know where the money's at, and trade towards the money that's fixing to be ready to hit. Right? Trade towards the liquidity that was already set. Right? And what I mean by that is this: let it show their hand, and then trade towards the money, which is here and here. Okay. And know your direction. So with that was a lot of value. Like we said in the beginning, drop a like, subscribe, drop a comment, message us on here, ask for a video shoot, where you recommend a video, we'll shoot it. Because guys, we want to interact with you. We want to know what you want. Right? Me and Joe hop on like, what you want to shoot about today, man? But this was a really good, I've been wanting to shoot this for a while, because I'm really passionate about that little segment right there. So yeah, man,
that was great. I mean, yeah. And just to reiterate, just to kind of summarize what Hunter was talking about is, the liquidity zones are great for entries. It's great for risk management. It's great for your trail stops, your TP, your take profit areas, take profit zones. There's so many different things that you can do with this. Most importantly, obviously, identifying where the money's at. You really, well, I won't say the C word, but it's really hard to mess up when you're paying attention to those things. But if you're not paying attention to those things, that's when the market makers will get you, just like Hunter said, because they know the psychology behind your trading. Man, that was good stuff, Hunter. That was good. I hope you guys enjoyed the video as much as I did. I love when Hunter shares his knowledge with us. The liquidity zones, guys, if you go and do any search on YouTube or just on Google in general about liquidity zones and beating the market maker using liquidity zones and order blocks, you'll see that a lot of very successful traders use this to identify, right? It gives us a leg up, you know, to trade against the market makers. Because like Hunter's always said, we're specks on the bottom of their shoes, man. We're nobody to them, but they still like our money. And they're smart, so they get us both ways. They get the people that buy into whatever trend they think they're setting up. They spike it, take their stop losses out, and then they go back up and get the other stop losses, all in a short, quick little jump. You know, it's just a quick boom, boom, or boom, boom, and they're done. They've got their money and they've gone. So then they let the market move, you know, the way people think it's going to go. But there's nothing more frustrating, guys. I can tell you this, Hunter, and I can share this with you and attest to this, is that when you think the market is going to do something based off of, you know, market maker cycles, pattern timing and cycles, and it does it, but because you didn't have proper risk management, because you didn't understand where liquidity was at, so you didn't have your stop losses in place, you get stopped out, and then it runs the trade that you thought it was going to go. Any of you experience that? Well, if you have, now you know Hunter just gave you the sauce to make sure that doesn't happen anymore. Or it happens less than it's happening right now. Because usually that's very common with new traders. When they start setting stop losses, those stop losses get hit because they're too tight, because you don't understand the liquidity zones. And then the trade actually goes in the direction. The good thing is you're identifying the proper trade. Now you just got to get it cleaned up on setting proper risk management. You'll be good to go. With that, guys, man, this is so awesome. For those of you that are ready to take your trading to the next level, check out Pippin and Dippin Academy down below. The links are down below in the description. We have some other videos in there as well. We have tons of video content on the YouTube channel for you to go and check out. The broker that Hunter and I use, we have a link to that down here in the description as well. And again, guys, if you need something, you need support on something, you'd like us to shoot a specific video, let us know. We've done it two or three times now for people that have reached out to us and shot those videos. So with that, guys, thank you so much for stopping by. Hunter and I truly appreciate you guys, and look forward to seeing you at the next video. Until then, Hunter, go ahead and take us home, brother.
Keep pipping and dipping, guys. See you on the next one.